For question number 1, I will analyze the role of Bank Negara Malaysia or BNM in supporting the development of Malaysia's sukuk and Islamic financial market. BNM is not only Malaysia's central bank but also the key institutional driver behind the stability, credibility and global competitiveness of the Islamic financial system. Bank Negara Malaysia is the central bank and primary monetary authority of Malaysia. Its role extends beyond conventional central banking to include the systematic development of Islamic finance, particularly in ensuring that the sukuk market operates in stable, credible and Sharia-compliant manner. As a monetary authority, BNM is responsible for maintaining price stability, safeguarding financial system stability, and ensuring the orderly functioning of financial markets. In the context of Islamic finance and sukuk, this role becomes more complex. BNM ensures that Islamic financial institutions have access to Sharia-compliant liquidity instruments, which are essential because Islamic bank cannot rely on interest-based mechanism. Under the Islamic Financial Service Act, BNM regulates Islamic banks, takaful operators, and Islamic widows on conventional banks. Through comprehensive prudential standards and policy documents, BNM ensures sound risk management, strong capital adequacy, and full Sharia compliance across all Islamic financial activities. Moving on to Sharia governance, the Sharia Advisory Council, or SAC, at BNM is the highest authority on Sharia matters in Islamic finance in Malaysia. A key feature of the SAC is that its rulings are legally binding on courts, arbitrators, and Islamic financial institutions. This centralized authority eliminates Sharia ambiguity and international conflicts within the industry. The SAC issues Sharia rulings on Islamic financial contracts and instruments, endorse sukuk structures such as ijarah, wakalah, murabahah, and musyarakah, and ensures consistent Sharia interpretation across the entire financial system. As the result, Islamic financial institutions and investors operate within a clear and predictable Sharia framework. The role of the SAC significantly reduces Sharia compliance risk, lowers transaction costs, and enhances international investor confidence in Malaysian sukuk. However, from a critical perspective, while Malaysia's centralized Sharia governance model improves consistency and efficiency, it may limit flexibility when aligning with the international standards such as those issued by AAO, IFAI, or adopted in GSEC jurisdictions. One of the major structural challenges faced by Islamic banks is liquidity management. Islamic banks cannot use interest-based instruments and therefore require Sharia-compliant mechanism for short-term liquidity management. To address this constraint, BNM established one of the world's earliest Islamic interbank money markets, known as the IIMM. Through the IIMM, BNM introduced several key Sharia-compliant instruments, including Mudharabah Interbank Investment, the Commodity Murabahah Program, Bank Negara Monetary Notes I, and Malaysian Government Investment Issues, or MGII. Sovereign sukuk such as MGII play a crucial role by forming a benchmark yield curve, facilitating accurate pricing of corporate sukuk and deepening overall market liquidity and resilience. Without BNM's liquidity management framework, Islamic Bank would face seriously operational constraints, which will ultimately hinder the growth and sustainability of the sukuk market. In evaluating BNM's overall impact, several strengths can be identified. BNM has successfully designed a comprehensive Islamic monetary and liquidity ecosystem, established a strong centralized Sharia governance framework, reduced systemic risks, and enhanced market confidence. This effort has enabled sustainable, large-scale sukuk issuance. BNM's role therefore extends beyond regulation. Its function as a market architect and system stabilizer.
This slide explains the role of Securities Commission Malaysia, or SC. The SC is the main regulator of Malaysia's capital market, including the sukuk market. It regulates Islamic capital market instrument and issues sukuk guidelines to ensure compliance with Sharia and capital market laws. The SC also oversees issuers, intermediaries, and market conduct, and established the Sharia Advisory Council. Overall, the SC ensures sukuk are transparent, Sharia compliant, and protect investors. This slide focuses on sukuk guidelines and market supervision. The sukuk guidelines provide clarity on permitted structures such as ijarah and musyarakah and require clear assets, proper risk sharing, and full disclosures. In terms of supervisions, the SC monitors the issuance process and compliance. This ensures fair pricing, transparency, and prevents market abuse, which help maintaining investor confidence. This slide compares the roles of SC and Bank Negara Malaysia. The SC focuses on regulating the Islamic capital market and sukuk issuance, while BNM regulates the Islamic banking system and ensures financial stability. The strength of the SC is providing clear sukuk guidelines, while its limitation is limited involvement in liquidity management. BNM ensures system stability but is less involved in sukuk markets. In conclusion, both institutions play complementary roles in Malaysia's Islamic finance system.
In the early stage, sukuk ijarah was the dominant structure in Malaysia. It is based on a leasing contract where investors hold ownership in tangible assets and earn return through rental income. This structure ensures strong Sharia compliance because the returns are asset-backed and free from riba. Due to its simplicity, transparency, and relatively low risk, sukuk ijarah have built investor confidence and play an important role in the initial growth of Malaysia's sukuk market. However, its main weakness was its limited flexibility, especially when financing large-scale and more complex projects. As Malaysia's economy expanded, more flexible sukuk structure were required. Equity-based sukuk such as masyarakat and mudah wabah were introduced, allowing profit and losses to be shared between issuer and investor. This structure aligned more closely with Islamic finance principle and democracy al-Sharia, particularly fairness and justice. Nevertheless, the higher level of uncertainty made them less attractive to risk-averse investors. To address the issue, Malaysia developed hybrid sukuk structure, including wakalah-based sukuk, which combine multiple Sharia contracts and provide greater structuring flexibility. Innovation in sukuk structure become necessary to support infrastructure and development financing, meet global investor expectations, and remain competitive with other Islamic finance hubs such as GCC countries and Indonesia. While this innovation broadened the investor base and strengthened Malaysia's global leadership in the structure market, increased structural complexity also raised challenges related to transparency and Sharia standardization. This highlights the ongoing need to balance innovation with market acceptance and Sharia integrity.
For our innovative sukuk case study, we selected the Green or Sri Sukuk in Malaysia. This sukuk is designed to finance projects that bring positive environmental and social impact, such as renewable energy and suitable infrastructure. In the term of structure, Green Sri Sukuk is usually based on wakalah or ijarah contract. Investor provide fund to the issuer and the fund are used for a specific green project. The income generated from this project is then distributed to investor as profit. Green Sri Sukuk is fully compliant with Sharia principle. It does not involve interest as the returns are generated from real economic activities. There is also no excessive uncertainty because the project and use of funds are clear stated from the beginning. In addition, the Sukuk only finance halal and ethical projects and is approved by Sharia Advisory Council. This makes Green Sri Sukuk consistent with Maqasid al-Sharia, especially in promoting sustainability and social welfare. Green Sri Sukuk has successfully attracted both Islamic and conventional investors. Islamic investors value its Sharia compliance and ethical nature, while conventional investors are attracted by its ESG focus and competitive returns. In the term of success, this Sukuk strengthens Malaysia's position as a global leader in sustainable Islamic finance and help broaden the sukuk market. However, there are some limitations such as higher monitoring costs, potential greenwashing risk, and a smaller market size compared to conventional bonds.
For the final part of our presentation, I will be focusing on the future strategies for Malaysia's sukuk, also known as Islamic bonds. Currently, there is rapid expansion of the sukuk market in GCC countries and Indonesia, which has intensified competition for international issuances and global investors. For instance, by the end of January 2025, sukuk accounted for approximately 40% of the total outstanding debt in the GCC debt capital market. The first strategy for the future of sukuk is the adoption of ESG and sustainable finance. In the sukuk context, this refers to issuing Sharia-compliant sukuk, where the proceeds are used to finance projects that meet environmental, social, and governance criteria. Examples include like green sukuk, social sukuk, and sustainability sukuk. So why ESG sukuk? This is because Malaysia has a strong potential to lead in this area. Our well-established Islamic finance infrastructure make ESG sukuk easier and more cost-efficient to structure and issue. In addition, Malaysia has the supportive government policies to promote a green and inclusive economy with a national target to achieve carbon neutrality by 2050. However, several challenges need to be addressed. This includes the lack of standardized ESG metrics and reporting frameworks, as well as higher due diligence costs due to additional environmental and technical assessments. The second strategy for the future of sukuk is by leveraging fintech, particularly blockchain technology. In the context of Islamic bonds, blockchain refers to the use of a distributed digital ledger to issue, manage, and trade sukuk in a more secure, transparent, and efficient manner while still complying with Sharia principles. To understand how feasible this strategy is, let's look at the implementation potential. Malaysia has a strong potential in this area. This is because there is a strong institutional support with Bank Negara Malaysia and the Securities Commission Malaysia. They are already launching a national roadmap to test blockchain-based asset tokenization. In addition, blockchain offers clear economic benefits, such as reducing issuance and servicing costs, as well as attracting a wider pool of investors, including retail and foreign investors. However, there are also challenges to implement this. One of them is the uncertainty of legal and regulatory frameworks. This is because Malaysia currently lacks a fully comprehensive framework for tokenized securities and blockchain-based sukuk. There are also technical and operational risks, including potential software bugs and security vulnerabilities, particularly in the early stages of implementations. So that's all from us. Thank you.